Hello, my name is Patrick, and I am here just to record and provide some of my own analysis on what I think the market is currently doing after last week's Jackson Hole announcement from the Fed. Given that Jay Powell's dovish tone that perhaps rate cuts are on the table for the next September meeting, I think that obviously fueled the rally last Friday, and I think there are still a lot of non-believers of this bullish market. And so before heading into last Friday, you saw that the market sort of sold off into Jackson Hole on Friday, making consecutive day lows. And we rallied about 1.5% on Friday across the board. One thing that kind of stood out to me was that on Friday, the S&P made a new high versus what QQQ did on Friday was it did not. And QQQ actually retraced about 6.18 Fibonacci retracement and stopped there. And so that's one of the concern that I had going into the weekend. And on Monday we saw that right at open we sold right into it until about 10 o'clock, where the market kind of found its stability and foothold and started to rally a bit. But right now, it's about 2:34 p.m. Eastern Standard Time. Most of the market is either open flat or just slightly red. Bitcoin is starting to come back just slightly or come back flat. Of course, we also had that Bitcoin scare over the weekend, and so that kind of triggered a lot of sells into the weekend and onto Monday Open. But one of the names, or two of the names that kind of stood out to me was Tesla. Now, Tesla over the last couple of days actually made consecutive lows until Friday, which was aligned with the rest of the market. But today, it also experienced some sort of pullback in the morning, but it actually started to rally higher throughout the day. And so, what I expect to see of Tesla is that it should be able to test the 350 level, and that is consistent with the previous highs. And once the 350 level gets over to 357, after that would be 367, and above that we would probably go for the highs again. But again, it really depends on what this week holds. There are a lot of macro data coming out. We have GDP at pre-open on Thursday, and we also have Nvidia earnings on Wednesday after market. So there will be a lot of catalysts and market mover events to move the market, and so that's why that is why I'm seeing the market kind of at hold or stagnate right now until something happens. So my positioning right now has pretty much been zero since the market opened. I was going to pull the trigger on some Tesla calls, but I did not, and so sadly I did miss that option. But I think the general the general analysis that I have for this market is that there isn't any euphoric buying yet. We saw a rally on Friday for the overall market. We did not see Q recover as much as I like to. And so I think we do have a bit of room to go up. And a lot of bears in the market are expecting some sort of major pullback that we should experience that's lower than the August lows, which was SPY at 620. And I think we will get that some point later in the year. And one of these pullbacks I would expect would follow after a couple of days of euphoric buying. So we will be grinding up higher for new all-time highs for the next consecutive days. And when that does happen, that is when I will be looking at buying really, really small short hedges to the downside. And once that type of event happens, it usually leads to about a 3 to 4% pullback. And so if you go back to previous candles that we've seen this happen was probably the last year's December's um, candle patterns, which was, oops, sorry, that was too far back. So I believe it was right after Powell had its FOMC meeting on the 18th. The market tanked about 3% into close. We had a rally back up, and then we also tanked right after as well. And so these types of movements usually consists of about a 3 to 4% drops. And so if you even buy one or two put contracts, you can probably make about 200 to 300% if you hold it down um, to the 3 to 4% drops. But right now, I don't see that yet happening. I see the market going a lot more higher. I see the only way that the market will experience some sort of major selling is if we have a lot of major buying. After Friday, I don't see any agreement with the bulls buying it up yet. It may rely on some sort of catalyst like the NVIDIA ER or the GDP cooling. Or I don't know, maybe if the GDP is hot, it would signal a requirement for more Feds cutting. Or if the GDP is cool, perhaps there is no rate cuts would trigger some selling. So right now, the market is in a mix. I expect this to get a lot more higher, but for me, I will play it safe. I will not enter any positions and just watch on a sideline. I don't think I will make money if I were to play during the day because you could see the candles itself is quite explanatory. Like the 5 minute candle chart looks like this. Like it's really hard to scalp. If you're a futures trader, perhaps you can make a couple of ticks, but for me, this is not my cup of tea to play in. So that is my take for this week. So I hope my videos, I can continue to make these videos for my own journaling. This is not financial advice for anyone. I'm not advising anyone for any entries or exits or any sort of financial advice in that matter. I am just doing this on my own to help myself journal my trading journey. I've been trading for about 3 years now. I've seen a lot of patterns of the market for a novice trader. I've like to admit that I want to be profitable. I'm still break even right now. I'm still learning about the market. I'm still trying to see the pattern of the market. Obviously, patterns are similar but never repeatable. So I'm just trying to share as what I see to the rest of the people on this channel. If you'd want to follow my journey, please subscribe. I will try to make at least one video every 2 to 3 days. If there are not, if there isn't anything that's happening in the market, I probably will not post anything. But if I do see something major that's transpiring, then I'll definitely post. So I would appreciate if you subscribe to my channel. And yeah, thank you for your support. Cheers.